Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, I'm going to give you an entire wrap of the day's trade. Well, the market started off on a cautious note. We did see some kind of pulls coming in right after a flat opening in trade today, but the markets were unable to sustain onto those gains and quickly slipped into the red. Well, in fact, it was a day when the Nifty slipped below the 18,000 mark towards the end of the session. The Sensex gyrated about 920 odd points, but fell 650 odd points and closed below the 60,000 mark as well. So that's an important mark. 60,000 and 18,000, the crucial support levels have been breached on the downside. Will this sell off actually extend? Is the big question coming in now. But before that, let's quickly look at the closing levels and the reasons behind the market fall today and the stocks and the sectors that slipped the most. Well, if you in fact look at the closing levels, 656 points gone for the Sensex today, or over a percent of a loss, and 60,098 was the closing level for the Sensex, so barely above that 60,000 mark. The Nifty was also down 174 odd points, or 0.96% in trade, and 17,938 was the closing level. About 1432 odd shares advanced in the trade today, whereas 1766 shares declined and 72 shares remained unchanged at the end of the trading session. There were a whole host of stocks that were in news today, like Asian Paints, Shree Cement, Infosys, Grasim, and HUL. These were the top Nifty losers in trade today. The gainers included the likes of ONGC, Tata Motors, SBI, Coal India, and UPL. Of course, there were other stocks as well, like JSW Energy, which reported its earnings and very strong earnings at that, and the stock jumped about 5% in trade. The net profit has really tripled to 324 odd crore rupees from 123 crore rupees for the corresponding quarter in the last year. Paytm shares also warranted some attention. The stock has hit a lifetime low. It has hit a record low and has slid below the 1,000 rupee mark as well. 990 was the level at which it has touched today, the lowest level from the time it got listed in November, and 997 or about that. 5% decline is what we saw towards the end of the session on this stock too. Apart from that, let's look at the sectors as well. The Nifty IT underperformed the index by diving as much as over 2.13%. The financial services sector also faced a lot of pressure. There was a mixed trade that we actually saw on the D Street today. A whole host of like auto, metal, power, oil and gas indices ended in the green. But on the flip side, it was the FMCG index, the banking index, IT, pharma, royalty, all of them, they declined in trade today. When we talk about the broader market space, it was the mid cap index that fell about 0.3%, and the small cap index ended flat. So, what's the concern that weighing on the minds of the market? Well, if you see, we do know that the markets have been facing global equities pressure, and that has been getting reflected on the Indian markets as well. Globally, the markets have been looking at a sell off on the back of a surge in the US Treasury yields and the rate hike worries as well. We do know that the inflationary concerns have been stoking as well. And on the other hand, US Fed has been constantly talking about how interest rate hikes may be coming and more aggressive interest rates as well. Apart from that, the crude oil prices have been on a rise. 7 year of high is what we've seen on the Brent crude. In fact, there are talks about how Goldman Sachs has mentioned that the Brent crude may actually touch $90 per barrel just this month alone, and may approach the $100 per barrel mark as well. Most of the market experts do say that this will be very negative for the stock markets in India for sure, because India is an oil importing nation, and whenever the crude oil prices rise, the import prices rise for India as well. So that's a bit of a concern for the Indian markets too, and which is why you saw the decline in trade. Apart from that, it's been the continuous sell off by the foreign institutional investors and foreign portfolio investors as well. Remember, they bought in trade in India right from the beginning of this year till January 6th. But after that, it has been a continuous decline, is what we have seen. And that's causing some kind of a pressure on the overall sentiment on the D Street. But every time we are seeing the markets really react, it's on the stock specific news. Whenever the earnings are coming, even despite the weakness on the D Street, we did see a whole lot of stocks reacting to their numbers and reacting positively. The market's giving a thumbs up onto those stocks and positive news developments as well. So we have to keep a very, very stock specific approach to the markets, as what most of the experts have told us. Apart from that, on the index level, the markets, the experts do say that there could be some cautiousness that all the investors need to be very cautious about when they're trading on the index, because 2 days of red candle is what we have seen on the markets, and this may actually extend if the markets are not able to return sharply and cross over 18,200 level. That was the initial resistance that we had talked about. Once the markets cross over that, only then the long trend can be firmly established. Otherwise, some more sell off can be expected in tomorrow's trading session as well. We'll keep you posted with all the developments in the markets and from the world of business. So, for that, do like our video and subscribe to our YouTube channel, and stick with us via our social media platforms: Twitter, Facebook, LinkedIn, and Instagram. Many thanks for tuning in.